All right, good morning, everybody. So I had a lot of people asking for the 0-day videos. Makes sense. We've been doing quite a few of them publicly. The website is not always easy to navigate because there is a lot of material there, right? And you can imagine how much of a nightmare it is to try to catalog and organize years and years and years of data, especially when there were multiple people making a decision about where the material would be. So I'm pushing really hard to get you guys a list, just a master list that's on a single page, so that once you can see what the name of a video is, you can just use the search bar in the upper right and you can go search for it. Without that list, if you're new, you wouldn't know what to search for, even if there is a search feature, right? So I'm working on it. Just stick with me. If you want to help with that, you can send emails to the owners and say you would really love to have some way to find videos, and that if they could just make a master list of all of the next level library, then you could add your voice to the chorus. And yeah, you know, um, the Bullish Bears has always responded really well to requests for new content, new material, um, new features on the website. So if you look for something and we don't have it, ask me. I will make it. Um, if you want to see changes, you have to ask the owners. I'm not someone who gets to make changes, but when it comes to videos, I most certainly can add more content. I do have a whole list of new material that's made. It's just not on the website yet because I don't know how to create or modify websites. So once I make new material, it's on somebody else to put the material into the website. But once you're on Next Level Library and you choose options, scroll all the way down and you'll see option strategies, right? So let me show you again how I got here. Go to Next Level Library, scroll down to options trading, scroll down all the way to option strategies, 3 videos, 0 day, 0 day, 0 day, 1, 2, and 3. All right, so that's how you get there. We have economics on deck. The uh, the market made an amazing move yesterday before 1 o'clock. We got up to yesterday's level. It really looked like the rejection spot. It was the place for the flip. And then oil made a significant move, and it was like rocket fuel for the market. Just really burned through all of these resistance levels and got us above in every index. It was absolutely amazing. It was perfectly timed too, so that at 1 o'clock when the econ came out, we were able to take the 0 day with much greater confidence at that point. So it was a win-win all the way around. But that move in oil yesterday kind of revalidates the old thing that I've been saying for a while now. Energy does still matter, even though for years economists have been saying that sector-wise, energy just doesn't have the impact that it used to. And I can agree with that to a point, but lesser impact does not mean no impact. Today, we got some big ones on the table. Uh, there's nothing else bigger than today for the month outside of the FOMC meetings coming up. It's that big. So be on your toes today, even for the rest of the week. We're looking at significant change event throughout the marketplace. And I was going through and looking at some of the options stats after the market closed, and there was nothing inspiring in any of that. This is not the end of it. Let me say that. This rally we had yesterday, nothing more than a dead cat bounce. We're not headed back to the upside. We're not done with these lows. We're still going to maintain these lows. I won't say we'll go lower. I won't put that out there, but we're most definitely not headed back up. And at the bare minimum, we're just going to hold these levels still. 5 things you need to know. There was a meeting between very high ranking levels in this conflict, and both sides talked out the side of their head. Neither one of them spoke to each other. They spoke at each other, basically accusations and a whole lot of nothing. So the talks at this point have gone nowhere, right back where they started. Russia is now applying sanctions. So everybody is sanctioning everybody. Everybody's pointing fingers at everybody. Nothing's getting done. Everything is getting more expensive. We're going to really see the impact of a lot of this at the beginning of the next earnings cycle. Make no mistake about it. It's going to be a difficult year across the board. So we got the ECB. That's the European Central Bank. If you're new and don't recognize the alphabet, then we've got our own inflation data coming in, jobless claims. It's going to be a rough one today. The good thing is it shouldn't shift, right? Like that's a really big part of the equation. Whatever we do get out of it is very likely going to stick for the day, and that's it's about all you can ask for in the current market. On the 5 things that you need to know, if you haven't heard me say it before, it's free. You don't need a Bloomberg subscription. You can just go to Bloomberg and sign up for it. They'll email it to you every morning. I mean, you got to kind of ask, why not have a Bloomberg account, though? It costs me $5 a month. Come on. You can't even go to McDonald's and get a coffee for $5 a month. Market Watch. If yours is cluttered like this, the easiest way to get it cleaned up is just turn everything off and then turn on Econo Day event. I usually grab that description and bring it over next to the time so that it is easier to read. Very often I take a picture of this first thing in the morning because as these events go by, they drop off of this list and then you can't see them anymore. Just takes moments to take a picture. Then you have it for the day. You could stick it in your journal and you've got it. 7:45, 8:30, 10:30, 11, 11:30, 1, 2. It's going to be like that, guys. Almost every hour, there's something else coming out. The auctions today, 11, 11:30, and 1, these are really serious. They can change the day. We can have just a flat, boring, choppy day. These come out and change everything. Whip us right into a trend. If we were already trending through the morning, these can kill a trend and stall it for the rest of the day. They don't get much attention, but these additional auctions are really, really important. And if you're trading SPY or the Qs, or if you're trading in the futures, you absolutely want to keep your eye on the clock. Do not miss these. You don't want to get in right before this and then get stopped out when the volatility comes through, or go the wrong direction, because these can come out and absolutely change our market. So I mentioned that I was going through looking at yesterday's numbers. There's not a lot of names to go through to be able to do this. So it's something that you can do really fast. And Thinkorswim is perfect for this. I'm on SPY. I've got the options stats pulled up. There's 2 main concepts when it comes to trading and analyzing options data: at the bid or below the bid, at the ask or above the ask. We can't look at options volume and say, oh, there was more buyers than sellers. Oh, there was more sellers than buyers. This is a marketplace. We put a buyer and a seller together and a transaction happens. But what we can try to identify is who was the initiator, who was the aggressor. Was it a buyer looking for a seller, or was it a seller looking for a buyer? When they hit at the ask or above, that's very aggressive on the buy side. If they had at the bid or below, it's very aggressive on the sell side. So with these numbers, while it's not perfect, it gives a good grasp of what kind of options were traded yesterday. 43% of SPY yesterday was hitting at the bid or below. So that was sell side activity in the options. Now we could look at calls or we could look at puts, but we could also just run them together and say 43% of the options traded yesterday in SPY were on the sell side. That could be sell to open, could be sell to close, but it was on the sell side. 43% was on the buy side. Remember, these are aggressors. These aren't the mids. When you build a spread, you're sitting in the mid. 12% was the mid. When we think about the delta level, below 50 in the delta level means you're out of the money. We can run those numbers too. How many of those were at 4 delta or below? And that's way out there, right? 15%. How many were below 20? 27%. Right? How many were below 40 or at 40 and below? 27%. So you can see how there's a lot of these trades were very far out of the money options trades. 18% was near the money. Consider near the money, and I'm thinking of adjusting that number a little bit, but definitely a little above 40 and a little beyond 50, 51, 52, but near the money, not necessarily in the money. Although, I mean, once you get to 50, you're basically in the money most of the time. You might find a 50 that's not. Definitely at 52 and above, you're in the money. Only 10% of the trades yesterday were in the money. 18% were near the money. So that gives us an idea of what was going on. Now, there were 6.7 million options traded yesterday just in SPY. If you think that that number sounds a little high, you're off. It's not very high. It's not even at the 5-day average. That's not a very large amount of options traded considering it's SPY. 6.7 million options traded yesterday in SPY was below the 5-day average, and we can see that in the sizzle. So it was a boring day with not a lot of options volume because we weren't even hitting the average. Now, when you take SPY and then you add in SPX, you're looking at around 10 million total, a little less than that, but on an average normal daily basis, around 10 million options contracts traded on a daily basis. The average for all of the options in all of the marketplace is around 50 million. If we've got 10 million of that coming straight in from SPY, then you can see how much weight SPY has in the entirety of the marketplace. And looking at the stats in the SPX, we can do that same work and see where was the bulk of the options traded in spreads. So we go through the FANG names doing the same thing: Apple, Microsoft, Google, Nvidia, Amazon, Netflix, right? We go down the list. It's a small list, so it's not like you got to sit there for hours doing this kind of work. Within 15 minutes, you've gone through all of the FANG names and you have a very strong grasp of the kind of activity that we were looking at yesterday. So that when you get an amazing market rally like we had yesterday, and you want to go in and ask, well, is it going to stick? Did it actually mean something, or is it just a dead cat bounce? Is this the fuel in the rally to come up off of these lows with conviction and reclaim these highs? Nope, absolutely not. Not even a little bit. It was nothing more than just a beautiful run back to the upside, right? A dead cat bounce, reclaiming the previous levels. That's all it was. Great day, though, by the way. Made a lot of money, had a really great day. But when we look at the checklist for calling bottoms, one of the items on that list is that there is aggressive call buying across the board in the FANG names. And we did not get that. So we're not calling in the bottom yet. That's just one piece, right? One piece alone doesn't mean anything. But when we add it up with everything else that's on the checklist, we're not calling the bottom yet. All right, so we got the fibs on, measuring that retracement. We stalled out around the 618. We're still holding below it. That puts us in that channel. The fibs just work out really good for visualizing where that channel is. We're still in it, still maintaining the range. We still got our critical levels overhead, the 200, the 50, the angled resistance. Right now, we're in between the two cog lines, 42.11, 43.11. Looking at the 30-minute, we're underneath both of the major moving averages, the 200 and the 50. We're sitting inside of yesterday's range. And unless the news is clear enough and distinct enough, we're very likely going to maintain this range. Now, remember, a lot of times the first reaction to the news that comes out is directly predicated on the idea that anybody was off sides or not. So what I like to do in the morning on a day like this is, while I'm listening to Bloomberg or whoever's on the news, I'm listening to their tone and how confident they are. And I'm looking for them to say phrases like, well, we know it's going to be this. We know it's going to be that. Like they'll say something like, we know it's going to be high numbers, or we know it's going to be low numbers. We know it's going to be a hit. We know they don't know anything. And they've proven that they don't know anything when they get it absolutely wrong, really, really wrong. And they spend the morning saying, oh, yeah, we know it's going to miss. And then it hits with a big high number and everybody's caught off sides. When they're talking in the mornings and they're less confident and they're not coming out and puffing up their chest and acting like they got it all figured out, we often don't see that same kind of reaction in the market when the numbers miss. Game it out in advance. If the numbers are positive, what would our day look like? It's a really easy way to kind of get ahead of the situation and ask, if it was good numbers, what would that give us? Well, we've got an ADR of 2.6. We're down on the day 1%. We could easily reclaim that 1%, challenge yesterday's high, and begin working on Friday's close. That's the target to the upside. Make no mistake about it. When we get there, and we eventually will, when we get there, there will be a reaction in the market. To get there today would take an enormous amount of news. We would have to reclaim the negative 1% and then rally up another 1% beyond that. We can do that. Absolutely, we can. But it's going to take a concentrated effort in the sectors across the board. So it won't be subtle and it won't sneak past you. AD, tick trend, market breadth, advanced decline, UVOL, DVOL, everything will be lit. Your tape will be running really fast. The news will be coming in about what's causing it, and we will reclaim those levels. Without that, yesterday's high is the target. For any kind of positive news and upside push, yesterday's high is the first focus. And that yellow line that's sitting there is a part of the market maker move measurement, because right now the ES is sitting in a market maker move event, and that's the upside level. So it matches in confluence for resistance. To the downside, we got the cog line. We'll challenge yesterday's lows. When it comes to yesterday's lows, we've got a couple of them, right? We have the intraday low, which we are at right now. And then we have the Globex low. That would be 2 days in a row that we spend sitting inside this level. We're just winding up again, more and more and more energy. There's no promise of where this energy is going to be spent, no directional implication, just winding it up. We're back inside the box, but at the bottom of the range, with the expectation that we're going to continue to move to the upside to find the point of control again. 43.22 is the point of control. There's just a whole lot of stuff in our way. The danger is this really shallow area right below yesterday's intraday low, the RTH low of the day. If we break below that, we're very likely going to go to 4,200 before we even begin to slow down. A little bit of volume support around that area, some clustering around the 4180 area, and then below that it starts to get nasty, and we aim for the low of this structural price and put us around 41.5. There's no anticipation that we're going to make that kind of a move today unless the news is that bad, and it's a 2% move to the bottom of this structure. From our current location, that would put the S&P in a 3% move on the day, a negative 3% move on the day. For the NASDAQ, we've got a lot of volume resistance overhead at 13,600. It's going to take a significant amount of push to get back through that area. So the NASDAQ really got a lot of that fire yesterday. If you look at the absolute move, I believe the numbers were 3.6% move yesterday. It's a phenomenal amount of push. But 13,600 has a lot of volume that's right above us. We got to get through that. If we can get through that, then we've got a clear path to 13.8, and that gets us back to the top of that range. That's pretty much the highs of yesterday. That would also put us into the close of Friday. So again, those institutional pivot points. There has been a few olive branches offered, or maybe, the white flags waved, where the Ukraine has kind of implied in some way that they're willing to bow down and capitulate. Should some kind of news like that come through, this market is going to explode to the upside. So be very careful with your shorts. On the other side of that statement, it won't last, right? Because you still have to remember that the Fed's going to begin taper. We're going to have liftoff. They're going to be reducing the balance sheet. So we've still got all of that. We've still got all the inflation. We've still got all the sanctions. We've still got all these companies that are going to have to come out at next earnings and talk about how much less money they made because of all of these different situations. So the rally to the upside, while it will be aggressive and really fast, it's not likely to stick for a long period of time. We have to get on the other side of this decision coming up next week. We got a market maker move on the NASDAQ. And we just broke back below the 200 on the 30-day. So when this news comes out, we're going to look to try to reclaim these levels, get back up to yesterday's high. And that puts us right back into that 13,775 or 13,800 area. There's just a lot of resistance up there. And it's very likely that unless the news is really bad or really good, that we're going to stay right inside this range. And again, the way to play it is just to game it out. Game it out really positive, and then game it out really negative. Without one of those two, then we're just very likely going to stick the range. And if that's what we're going to do, then you've got a very clear day. You look left and play your midpoints. Run things that work good in a range environment like stochastics or your MACDs or your RSIs. And run your pivot miners to get your day done that way. Looking at the sectors that are moving in the pre-market, cloud computing is an ETF that we look at frequently just to kind of get a gauge of a different kind of tech, rather than just saying tech like XLK. We get a little deeper on the bigger names. The names that are in that list: Chop, Dropbox, Plan, Netflix, WDay, Xylo. These are the names that are up in the pre-market this morning. Both energy names are up this morning. And slightly, we've got metals and mining this morning, which kind of makes sense because they've had a significant pullback after that amazing rally that they were doing. Speaking of amazing rally, this is from the Thinkorswim website. It allows you to do a deep dive into the sectors and really kind of parse out which particular industry in the sector is doing good. I've got it set at the moment to the last 30 days, and you can see it's all been energy and utilities. I mean, sure, there's a little bit of real estate, some healthcare, industrials. The good thing about this little device is you can really open it up and start breaking it down inside of those for individual industries within these sectors. So for staples and retail, Kroger, Walmart, Costco kind of flat, a little negative, and then it starts to get negative going the other direction. Or industrials, road and rail, or aerospace and construction. So if you're looking for some swing ideas or a little bit of that capital rotation, this is a really great tool to put your hands on, but it's on the website. You have to log into TD Ameritrade to be able to get to this. It's not a part of the Thinkorswim platform. Emerging markets are down this morning. It's our perspective on global risk. Bitcoin is down this morning, nearly 6.5. We start looking at the names in the liquidity list. Every single name, or nearly every single name, is down this morning. A couple of them that are up slightly would include some of those cyclical names: steel, some hedging names: gold, silver, energy. And then, of course, Amazon came out with news about a split, a 20-to-1, which would put its stock, I don't know, less than $200, I think. That would be absolutely phenomenal, but it's not official yet. It's got to go to the board. But they haven't had a split in like 20 years, if I remember right. So that'd be pretty awesome. Too bad it's so expensive at this point that most people aren't going to be able to get a hold of it. Just remember that there is fractional shares, right? So Amazon is not too expensive when it comes to the idea that you can own a fraction of a share of Amazon even now. On a day like this, you're very likely going to have to lean into the watch lists that you use and not lean into the sectors. And I do have a video on how to bring in the most liquid names by using the CBOE website data. You can see that video to understand how to do it. If you go to the large caps room and click the pin in the upper right corner, there's pinned messages and videos in there that I've put in so that you'll be able to go through the steps to create your own list. That's what I got this morning, everybody. Be careful, be safe, and I'll see you all in the chat room.